Hello, my YouTube friends. I hope you're all doing well. Welcome back to another day in Brussels. Beginning to really enjoy the city. It's pretty cool because I didn't expect to. Anyway, today we're going to talk about valuations and why I ignore them sometimes. Hope you enjoy the video. It should be really interesting, so stick around. Good morning. My name is Adam Kahn, and this is Investing with Adam K. Today is June 12th. I hope you're all doing well. Probably still June 11th, actually, back at home, but we're, I think, 9 hours ahead from where it is in Las Vegas. A little bit chilly, a little bit rainy yesterday. It seems to be clearing up today, so super excited. I've actually really enjoyed my time here in Belgium, and I'll get into valuations and I'm going to talk about Apple in particular and what I see in these companies and go into why I sometimes ignore valuation. But I'm also going to blab a little bit about the trip, so I hope you guys don't mind. Having a really nice time, but some things kind of crack me up. Like, I know a lot of people talk about the Belgian fries and the Belgian waffles, and get super excited about it. And I'll tell you, the fries are better than what we get at home, but quite honestly, it's not something to go crazy about. Same with the waffles. They were very good, but a little overstated in some of those videos, which makes me think some of those travel videos, people get a little bit overexcited about places. Oh my God, this is the greatest place ever. And we're having a fantastic trip, but needless to say, things are, things like how great can a thing of french fries be, or how great can a waffle actually be? And I'll tell you what, I'm sure not going to wait in line a half hour to get one just because YouTube or whoever else says they're so amazing. So, anyway, into valuations and why we ignore them. What I find is the best companies are the best companies, and they tend to perform no matter what's going on. They find a way to continue pushing high. So I'm going to use Apple as an example because, to be perfectly honest, I think the valuation is extremely high. Their earnings are slowing. The only thing that seems to be pushing it is a higher PE ratio, which keeps getting bigger and bigger, even though the earnings aren't going up over quarters. Meanwhile, yesterday they were up, I don't know how many percent it was. I didn't look real closely, but something like $10 and closed at $207 a share. Now, recently, I watched a video that Dan Niles had done talking about the overvaluation of Apple, and I actually agreed with him. I think his analytics and his analysis are spot on, and I feel the same way that the stock was overpriced, and I actually got out of it. Now, this is where I want to thank you guys because in my videos talking about owning the best companies and ignoring all of that and owning them forever, I reversed and got back into my position. Forgive the voice and me cutting in and out every now and then. I seem to have a bit of a cough, and when I talk, it seems to flare it up, so I keep cutting off so I can cough a bit. Anyway, I got back into the position reminding myself what I talked to you guys about, which is own great companies for as long as possible. Apple being one of those companies. I don't want to not own the company simply because I have an opinion that it's overvalued. I think it creates a potential to miss good opportunity. The best companies tend to be overvalued for a very long time. And look, I tend to want to be a value investor. I find the opposite is true as well. You can find great value, but things can stay undervalued for a really long time as well. Markets are very emotional, and finding something that's a great value, well, that's wonderful, but if the street doesn't agree with you and it sits undervalued for the next 5 years, well, you're just going to own an undervalued company that nobody seems to care about and stays undervalued. Same with overvalued. If you stick with the great companies, and I would categorize Apple and Google and Meta and Amazon and Microsoft and maybe even Nvidia, but it's very hard for me after it's run so far. But all of these are great companies that I want to participate in. And I don't want to get too tied up in them being overvalued. Because what I tend to see happening is when I stick with these companies, those are my best trades usually. You know, Meta and Microsoft and Amazon and Google are my four best performers. All, other than Meta, who I think is fairly priced, but the others are all overpriced in my opinion. Does that mean I want to get out of these trades? Well, not really, because I think they'll continue to be overpriced. The funny thing is, the reason that Apple went up so much is they just announced an agreement with AI, Chat GPT. I don't know that it'll really turn into higher profits, which is really what matters the most, but the stock went flying on this. They also have a huge buyback that they announced at the last quarter. These things are what are really driving the stock's price. So my gut wants to get out, but the reality is I'm going to trust what I keep talking to you guys about, which is great companies for a long time and just own them. And while everybody is making fun of you that you're just owning some overvalued stock, you can laugh your way all the way to the bank as it continues to stay overvalued. As long as these companies perform quarter after quarter, they'll continue to be overpriced. It's just the way the markets work. And, like my love of Pfizer, will probably be undervalued for a long time. They'll have to really prove it with strong earnings that are growing for the stock to really start to reverse. Now, don't get me wrong, I want to stay diversified. I want a mix of all of it to some degree. But I do want to be heavily weighted in the things that I think are going to do the best and stick with them. I don't rebalance as stocks continue to go higher because I hope that I have one that hits a home run. Now, keep in mind, this is not financial advice. Please do not make any trading decisions or any investment decisions based on the information I share. And for that matter, any information that any YouTuber shares. You should really seek out a financial advisor, do your own research when making your decisions for how to invest your money, because everybody has a different situation and a different position that they're in that makes sense for their own unique perspective. And mine is going to be different than yours. For me personally, being invested in the things that move the most is really important. And then I don't rebalance because if one of them ends up being the next big thing, I want to own it all the way through and not constantly rebalance and hurt my chances for that really turning into something big. As an example, I was fortunate enough to pick up Meta at the right timing, and it's done quite well. Well, I don't plan to rebalance it just because of that, where it makes more sense to be a percentage of my portfolio that it quote unquote should be. I hope that Meta just runs and runs and runs and continues to run and ends up being that stock that really puts everything up, like where it's the only thing that matters. Now, at some point, of course, if it becomes, 40% of my portfolio, I would make a change. But maybe I wouldn't even worry about it then. In the back of my head, I hope that Zuckerberg can just turn the metaverse into what I envision it potentially being and really push that stock up way higher than I could ever imagine and just be that thing in my account that I got super lucky with. I put in an amount of dollars that I was comfortable investing. Once it became a bigger number, why would I then want to sell it off? Because it's the one that's having success. You want to stick with the ones that are having success and not keep buying the ones that are having a tough time. So that's why I tend to ignore valuation on some of those companies. I paid attention to valuation in the ones that I'm picking up as a trade that I want to get in and out of over the next 6 months to a year because I'm hoping to buy them out at a good price and be able to sell them for a profit. But the ones I want to own for 20 years or whatever time frame that is, I try really not to pay attention too much to it. Anyway, need to wrap up early. My cough is bugging me and I don't want to keep turning it off every time I feel like I need to cough. And we're headed to Germany today. We spent a full week here. We went not just in Brussels here, but we went to Bruges and Ghent. We went and visited Waterloo because my son's a big history buff. It was super cool, had a lot of fun there. We did a tour of Brussels, which was super cool. So it's been a lot of fun. We're off to Berlin now. We've got a 7 hour train ride, I think. Oh, what a mistake doing that EU global pass on the railroad. We should have just done flights. People told me how wonderful it is. You get on the train, it's super easy. What a pain in the butt. Not just a pain in the butt, you have to constantly find the right trains, and then from there they charge you additional each time you book. I don't really care about the money. I can't care about it's a pain in the butt because the upgrades are rather inexpensive, so it's not that big a deal. But some of it's easy, some of it isn't. 6.5 hour train ride doesn't sound that much fun. I forget, one of them we were looking at has 5 different trains we're supposed to take. So we ended up finding a different route. We're taking a direct train to Switzerland and then another one to, yeah, it ended up being a big pain. My buddy said how wonderful it is. I guess by the end of the trip, maybe I'll have a different perspective on it, just like I did with Brussels. First day wasn't super excited, but we really enjoyed our stay here. Anyway, do me a favor if you can, if you haven't already, hit that subscribe button, smash that like button, make some comments. Let me know what your forever stocks are and if you pay attention to the valuation or if you just think they're great companies and hold on to them. Talk to you soon. Bye bye.